G'day everybody, John Seville here for your executive summary for stock setups for the 4th of February 2016, and what an interesting day. I'm going to start with the Dow Jones Global Index tonight, just to have a look at where we're forming up in terms of the overall global economy. If we have a look at the way things have been forming, again, in the US, let's just get this line out of the way. We've been looking at the head and shoulders pattern. What we see on the Dow Jones Global is a bit of a rising wedge. So today's action was very interesting because we obviously had a very big down day, and then it hit some support that I'll show you in a second, and then just rallied straight off of it. So the key thing to note on the global index is that we are still under resistance, and in a breakdown pattern or breakout pattern, it's typical for it to rally back into resistance. So that's one thing to note. As we go across to the S&P 500, we'll bring that back up. Obviously, most of the day was very, very, very negative until the very end, where it just simply rallied straight back up. And if we look at the 5-minute chart, what you'll see is essentially we formed a bit of a flag formation. So we'll bring up the volume. We'll have to do it on the SPY, sorry. Okay, so we formed a flag formation. So all of a sudden you can see this pump of volume came in over these last two bars. So what we look at is we start to see, okay, well, where does that breakout occur from? So there's the breakout point. Then we can measure the flag and look at the breakout. So ultimately, the continuation of the flag should top out somewhere around 192.18. We'll go back to the daily chart. Okay, here we go. Okay. So 192.18, which is essentially there, right underneath kind of this candle here, which is where the open range was set. So we've got some interesting action here where we're kind of rallying back up into the open range resistance off a very low candle. Now the support that I mentioned before is coming off of this low, and now that low was broken, and again we're retesting it. So what we're seeing is a first touch, second touch, third touch break, and now we're getting a retest of that in a new formation. So this rally isn't to be trusted, but it's not to be ignored either. But however, what we have to do is stick by our rules and look at the market and see, has it broken open range? No, it hasn't. We are still in negative territory. And if we look at the high yield bonds, which is the corporate high yield bonds on HYG, still kind of under that resistance, but yet again a bullish candle. So obviously, as Strath has been talking about, the central banks are doing everything they can to prop the market up, and I'm quite sure that the rally today was as a result of a lot of short covering. However, we'll remain cautious. I mean, the good thing, and what I want to impress upon people today, is that it's not a stock market, it's a market of individual stocks. And that's the beauty of how we trade, is looking at things that, and that's why we don't trade the S&P so much, and why we trade individual stocks. Because if you look at stocks like Cypress, CY, that still went down, still behaving very bearishly. If you look at the put position that I sent out today, intraday via text message, that certainly doesn't look like anything you would buy. There's nothing bullish about Amazon. Obviously, we're holding the puts on that, or I am anyway. If you look at, what was the other one here? MFLX, which reports aftermarket tomorrow, one of the ones I hold puts in. That wasn't acting bullishly at all. So you really have to look at the individual stocks you're trading and not worry so much about the market. And that's kind of the key tone. So for tonight, we're not going to make really any changes to our positions. We've got to wait to see what happens tomorrow. What I've been advocating for the last few days is to lock in profits where you've got big profits made. So, for example, I sent out a message earlier this morning that I was taking half of my position in ILMN out. I mentioned in Trading Room that our target area was going to be around this 140 down to 135 area. Obviously, we were down in that area, so I thought, right, time to take half profits. Obviously, this is still very much as well under its resistance, so still looking bearish. But these are the types of things where you get close to your target or at your target, where you say, you know what, I'll at least take the house money or take my money out and play with house money from here on out. So those are the types of things that I've been working with today. In terms of a couple of things I will say, ROK, Rockwell Automation, this one looks a lot like the market, but this is one that I'd be cautious of if we break above this kind of 96.63 level. I mean, if you wanted to be super conservative and if you're a longer term player in that, obviously I'd be looking at the high of this candle of 97.46, so looking at 97.43. But Rockwell is one of the more bullish stocks, but looks like the market. So, if I was in this, I'd probably have my stop loss set above that high of that candle. Another one that I thought was the worst of performers, the least favorite of the shorts, was also INTU. This one seems to have turned around a bit. Once more, the stop loss above the moving average, above 99, where we've already got it, is fine. But just saying, if you were choosing between other shorts, but you had your money in this, I'd probably favor other shorts versus this one. Of course, some of those shorts that we discussed that were looking good, Dish looking good, broke down, still under resistance. Interactive Brokers also broke down. Now, a lot of these obviously rallying back up into resistance, but still under all of their moving averages and still breaking support. So the key thing is going to be to watch what happens tomorrow to see where this market, tomorrow and the next day to see where the market goes. NUGT, obviously huge performer, wonderful returns today. As I mentioned, I hold calls in this, which were up 120%, which I mentioned in Trading Room last night. So if you bought some of those this morning, you would have captured a nice 120% return or close to. The stock up 21.6%. That was great. Also gold, G-O-L-D, Randgold Resources. Another really big day, closing right at the top of the range on increasing volume. 685,000 yesterday, 991,000 the day before, as it broke resistance. A huge surge today with 942,000, so topping even the breakout type of volume that normally is the best type that you see. So all of those things looking really good. Of course, the hedges performing well also. Obviously, TRGP, even in a weak market today, really didn't get much pressure. It was up 3.34%, and some of the other ones, CUDA, that I hold calls in. Both of those I own, but CUDA, again, rallying straight off its 9-day support and the 20-day support, and moving up right up into its resistance. So this is also looking solid. Of course, buyout rumors going on here. So the big thing is going to be tomorrow, possibly the next day, to see what happens in the markets. We've got a bit of manipulation, obviously a lot of short covering happening. So at this point, while we still remain closing below the top end of the open range, we still remain bearish, but clinch profits where big profits are had, and my approach is to still look for these types of hedges. So we talked about a couple of new ones last night. I hope those helped. I don't think they triggered today, like HBIO and so forth. But if the market does rally, those will be the ones that can accommodate a bit of profit on the upside if we do have to go through a painful upside for 10 more, 20 more points to the S&P. In the meantime, we are here. We're here to help. and hopefully you're all enjoying the market so far. We certainly are, and looking forward to a very exciting end to the week. Take care, good night, and happy trading.